What is up, guys? Dirk here, and I want to give you an update on the situation of the crypto markets and what the heck is happening, because the last 48 hours or so have probably been one of the craziest 2 days in the history of crypto. There's a few other events that maybe come close, like the collapse of Mt. Gox back in 2014, or maybe the implosion, the final capitulation back in 2018 with the hash wars with BCH and Bitcoin splitting, resulting in that 50% drop back in 2018. But this is probably among there with a top 3 craziness in the crypto space, where we basically have seen one of the biggest cryptocurrency exchanges, FTX, the international version, basically become insolvent. Now I'm going to try and give you some updates here in a quick summary and a quick rundown, but there is so much happening and so much basically being released still every single hour that's coming out about what was actually happening and what has happened in the past. So it is all crazy. This video, we're going to dive into it, but I also want to keep you updated on the charts of what I expect, certain levels that there are key that we need to keep an eye on. So grab yourself a coffee or a nice beverage, because this is going to be a nice explainer of what is going on. And while you're at it, hit the like button, subscribe down below if you haven't done so yet. Let's get into it. Okay, first things first. So let's start out with Bitcoin, which is currently back to trading at $17,900 as I'm making this video. Now, as you can see on the chart, and as you probably already know, we went below $16,000 for a Bitcoin. So yes, we finally broke down from this support, and while that may come as a surprise based on the news, the charts do tend to show this. And technical analysis, we have a rule: the more times that price sits on a support and the more times that it bounces, the more likely it is to break through the downside. So that is one thing I want to share with you also, is that while this news came out of the blue, basically, a week ago, CZ started tweeting. I don't even know if it's a week ago. And all this came to light, and the markets ended up breaking down as a result of those tweets in the news. But the charts have been hinting and showing at a breakdown into the low teens for many months already. In fact, I actually have shared this on social media on my channel, the possibilities of breaking down into the low teens for several months already. And no, I'm not going to claim that I called the exact date and I knew this kind of stuff was going to happen. I didn't know FTX was going to be insolvent. I had no idea what that was going to be. But the charts were hinting at a potential breakdown into the low teens, as well as if we just look at the drawdown comparing this bear market to the previous bear market, and the indicators that can be very helpful that guided us along the way and that have kept me from entering the market in a big way and have helped me stay out of harm's way for a large part. I'm going to be sharing all of that with you in today's video. So firstly, just to show you, if you didn't follow along, to actually show you that I was talking about this many months ago, you can see over here on August 19th, I will link to this down below so you can check it out for yourself. It is on my Twitter. You can see, at the risk of sounding like a big fat bear, there's a fair value gap and imbalance around $12,000 Bitcoin. You can see I've marked it over there, which is also the support or resistance over here. Many touches, much stronger than that previous all-time high. I said no guarantees, but ... And this was when Bitcoin was still trading at about $22,000. So look, the charts do hint at those possibilities. There's no guarantees, didn't know with 100% certainty, but that possibility was there. Then here, back on September 24th, I was also talking about this already when we were bouncing on the support so many times. So I said Bitcoin, the more times price tests a support level, the more likely it is to break down below it. We've been testing this level a lot. Let's see what happens in the next few days. Now, of course, that was back in September, and they have done a magnificent job of stretching this out long enough where they kept it bouncing on support so many times, squeezing so many people, sucking so many people in there, thinking it's going to break down. And every time they had these fake pumps, and then it came down to support, people thinking it's going to break down, fake pump once again. And at these pumps, they're liquidating the people who are betting with leverage on it breaking down. And of course, it's also sucking in people who are buying with leverage at the tops, thinking that the bottom is in. And then of course it comes back down. And this was, towards the end of September. It only broke down now in early November. I was also talking about this on my channel. You can go and check my videos. You can see multiple months ago, 2 months ago, 3 months ago, I was talking about here. we got this rejection. We're looking for 14,000 potentially and at $900 on Ethereum. We went into 15,000 something so far and pretty close back to $900. But of course, these were only just possibilities, and I have to say I was a bit early with this. I was expecting it in September already, and it took until November for this to start materializing. Okay, so the charts were showing this, and the reason why I'm showing you that I was talking about this in the past is that because technical analysis works, okay? It's not a guaranteed thing, but there are rules and there are certain criteria that allow you to make high probability guesses on where the price is going based on that. So one of the things that I was looking for is simply the same percentage retrace over here as the 2018 bear market, which you can see over here was about 84% for Bitcoin. Now at this point in time, when we had this move down, you can see over here, we only had a 73%, whereas now we're at 77%, but we are not quite at that 84% level, which puts us at about $12,000, which is 82 to 83%, which is very much in line with the previous declines in Bitcoin, not only 2018, but previously before that also, I think it was about 86%. So if we get 84 to 82%, again, we're looking at around the $14,000 level, which we have come pretty close to, but we might not be there yet. I will share with you a little bit later in this video what I think the possibilities are for further downside or further upside. So that was one of the things, okay, the drawdown with the bear market, especially because this 4-year cycle is very similar to repeating. You can see in the last bull market we topped in December 2017, and here we topped in November 2021. Before that, we actually topped in I think it was November 2013. So every 4 years a top. This is worth 3 times. This is pretty nuts. And then the downside here was exactly 4 years ago too. This lasted in exactly a year, and the breakdown over here started in November of 2018. And if you go back in time, maybe you remember if you were around, it was basically a similar situation where we didn't know what was going on. We were sitting on the 6K support for so long, and then there was all this drama with Roger Ver and Bitcoin Cash splitting, creating a fork of Bitcoin itself, and then hash wars and things like that, and that basically just crashed Bitcoin, and things went pretty nuts. Okay, so that happened in November of 2018. Now here we are, 4 years later, we're going sideways in a similar way. We're going sideways, and CZ comes out and starts tweeting about FTX. Now, of course, we can't specifically blame CZ because he wouldn't have been able to say anything if FTX and Sam had actually stuck to the rules and done nothing wrong, because then there wouldn't be anything to crash these markets. But we can say, or in my opinion anyway, the timing of that tweet at that crucial moment and revealing that about FTX and creating that bank run on FTX basically crashed the market. We can say, okay, this was CZ's fault, it was Sam's fault, whatever. But as I've shown you already, the charts were hinting at this, and the news comes out later. So that is one thing I've learned in all my years of looking at charts and doing this. The charts show the direction, and then the news comes out and the reaction comes. But either way, whatever that news was going to be, it was looking like the charts were going to break down, just technically in a large picture. And I'm not saying again that I knew the exact date or when it was going to break down. It's all probabilities, but the possibilities were there, and that's what we've had to be prepared for, because there's basically very little support here on this previous all-time high. There's a lot more support over here at this level, this top, and when we started the 2020 bull run, we went up here and we created this gap over here, and it is likely or possible, I no guarantees we're going to get there, but it's still very much a possibility. We fill that gap, we get back to that support, and we create that bottom over here. That makes a lot more sense. Even right now, we're like in the middle. You can see there's very little here. There's just this all-time high over here and this quick move up. There's not much in terms of support. And yes, we got a bit of a squeeze now, but I think that was very much based on people just heavily shorting with leverage. And we get that squeeze, we get a price movement up of $1,000 or $2,000 from those bottoms to liquidate everyone who is betting on more downside with high leverage. Okay, so we can see this move up. We'll get into that in a second. It can still reject and come down and come lower. Okay, so the charts were showing that. And another thing that was very, very important was the 3-day 50 moving average and the 200 week moving average, which I've been talking about for many months as a confirmation signal for the bull market. I've talked about it quite a bit in the past. Actually, even just 2 weeks ago, I made this dedicated video to the 3-day 50 moving average and why it's such a good bull bear signal. So this is the 3-day chart, the 50 moving average over here in blue, the 200 in red. And as you can see, I've explained this in the past, so I don't want to go over it too much. But basically, when we cross it, it's a very important potential long-term trend change. There can be fake outs, but in general, when we reclaim it without it being a fake out, we tend to get multi-week, multi-month moves in the opposite direction of the trend. So we had this fake out over here back in March. We got rejected and we sold off. And we were very, very close. In fact, we had one 3-day candle close back above it, and it looked incredibly promising as Ethereum had already reclaimed the 3-day 50 moving average, and the total market cap had already reclaimed it also. So this was key, and at this exact moment, that is when CZ tweeted and when everything dropped. It was the exact critical moment, and that's why I say, in my opinion, if he hadn't tweeted that, the market might not have crashed in the same way. Eventually, maybe there would have been some other catalyst, and maybe the news would have come out anyway, what Sam was doing, but the fact that CZ tweeted it at such a critical moment and we got that rejection, look at what happened exactly there. And this is a big reason also why I say, this is something I've learned over the years too, is with any reclaims of important levels, you want to get 2 candle closes, 2 consecutive candle closes above that level to reduce the chance of it being a fake out. So you can see over here, we got 1 close, but not 2 in a row. The next one was below it. 1 and then not again. Same thing here. We got 1 close, but the second one dropped and rejected. So you got to be very careful with any reclaims on the 3-day, on the weekly, even with support and resistances. Look for 2 consecutive candle closes above or below, whatever, if it's bearish or bullish, and that just reduces the chance of it being a fake out like we have just seen over here. So this moving average has been key to helping me decide whether we are still in a bearish or a bullish trend, and until we reclaim this, at the very least, the trend is still bearish and we could still see more downside, and that has been the case since it broke below it in December of last year. Once we reclaim it without it being a fake out, then we can start to think of longer potential bullish trends that could last months or maybe even the start of a new bull market. As you can see, that happens when we get above the 3-day 50 moving average. And then ultimately, also very important indicators, this is a 200-week moving average, which we are currently below. I want to see Bitcoin reclaim that before turning more medium-term and longer-term bullish. Okay, we can see over here that is currently about 24,000. I've been saying that for weeks, if not months now already. That is what I want to see first to reduce the chance of fake outs. And you can see we have been above that for a long, long time. We're below it now. That's technically bearish until we reclaim it. And ultimately, what we want to see for full-blown bull market territory is a reclaim of the 50-week moving average, which is here in blue. You can see that only happens a bit later, of course, so you don't catch the exact bottoms. But once it's a reclaim, you can see big moves tend to happen, and entire bull markets tend to happen also. So that is another one. Make a note of it, because that is just important, and it just really helps you, be in the right trend and avoid buying too early when the trend is still bearish, and increasing the chances of buying and then having less drawdown or less risk of continuation to the downside because of that important reclaim. Okay, so now before I tell you what I think could potentially happen and levels to watch in the short term on the chart, let me explain really quickly, as simply as possible, what has been happening with the FTX situation in the markets. So essentially what happened, and we're still getting all the information, but these links and this data is coming out. I will link to it down below so you can go and read this in detail. What happened is that FTX is one of the biggest exchanges, okay? Billions and billions of dollars. They were actually very reputable, and it's really crazy to see this happen. But apparently what happened is that they were heavily exposed to the consequences of the Terra Luna crash that happened in May. And apparently what happened is there were lots of hole coverings, loans being taken out, and things that shouldn't have happened. And as a result, potentially even Sam, the CEO of FTX, and Alameda, that allegedly he was taking customer funds, customer deposits that aren't supposed to be touched from the exchange, to use that to be able to cover these holes or paper over these holes and try and keep things all together, making it exponentially worse. And that is basically what ended up coming to light as a result of CZ's tweets that ended up crashing the whole market. Because this is just crazy what is happening. You can see over here, go and read this yourself because there's just so much detail over here. But basically, billions and billions of dollars were here that have been moved around and loaned and over collateralized. And this is just something crazy about this industry. And I think one of the good things that comes out of this at this point is that exchanges are going to be much more regulated and they're going to be held to much tighter standards, because this shouldn't even be able to happen. In my opinion, exchanges should not be allowed to touch customer funds. If there are $1 billion of customer deposits, those $1 billion should be there in a segregated account. And if all the customers want to withdraw it, that crypto should be there, because exchanges make exorbitant fees already. They make so much money just from the trading fees and from interest and all sorts of stuff that they shouldn't even need to touch customer funds. Now it seems here, I don't know what was happening, if this was being used to fill holes or if it was just plain greed, wanting to start trading customer funds to get an even bigger multiple, thinking they were good enough to do that, whatever the case is. But that seems to be the short of it. And you can see over here, Chief Executive Sam Bankman told investor Alameda, so the proprietary trading firm, but that is also very closely tied. The lines seem to be very blurred between FTX and Alameda, who was also a market maker for FTX. $10 billion is owed. And you can see this article here on Reuters, exclusive behind FTX's wall, battling billionaires in a failed bid to save crypto. This explains it pretty well. You can see over here on Tuesday morning, SBF, owner of cryptocurrency exchange FTX, caught his employees off guard with the summer message. "I'm sorry," he told them, "I effed up." And you know, it just goes into detail what happened here, but basically it just looks like FTX could be insolvent. We don't know the extent of the damage, how potentially insolvent they are, what kind of bankruptcy situation they're in. So that is all stuff that is still coming to light, and that could potentially still impact the direction of the markets. If there is still going to be very bad news that is going to come out, we could still get a further sell-off potentially into the low teens, right? 14, 12, 10,000. If more bad news comes out, if there's really, if it's going to be the case that there is bankruptcy and that there's going to be massive losses, contagion, we still don't know the real effects and the extent of the damage, how bad this really is. So I will just run through this really quickly. Also, there's an update from SBF. You can read this down below. I will link to it down below. He basically said over here, he just tweeted this out on November 10th. He said, "I'm sorry, that is the biggest thing. I effed up, I should have done better. I also should have been communicating more very recently. My hands were tied, so apparently Binance was trying to take it over. There was a non-binding letter of intent, but basically Binance pulled out of that, saying, you know, things look so bad, we don't want to get involved." So he's saying here I wasn't allowed to say much publicly. So here's an update of where things are. This is about FTX International, by the way. So this is separate from FTX US, which according to Sam over here, FTX users US are fine. But again, just a little side note here, this has always been the rule in crypto for years and years. Not your keys, not your coins. Any crypto that you put in a third party, whether it be Celsius, a lending platform, or an exchange, you are reliant on that exchange. If something happens to that exchange, if it gets seized, if it goes down, if it goes bankrupt, you don't have access to your coins and you can lose your crypto. And that is the case here, which is why it is so important to keep your crypto in long storage in a wallet that you control, where you own the private key. The easiest is a hardware wallet like a Ledger or a Trezor, because then even if the exchange goes down or gets seized or gets hacked or whatever, you own your coins and you still have control over them. That is the most important thing. So be very careful. Any crypto you keep on any exchange, no matter what exchange it is, there is no guarantee that your funds are 100% safe. So the best way to do that is to self-custody. Like I said, keep it in a wallet where you control the keys. Getting back here, FTX International currently has a total market value of assets higher than client deposits. So that's different from the liquidity of delivery. The full story here is that I'm still fleshing out every detail, but at a very high level, I effed up twice. Skipping ahead a little bit. Anyway, right now, my number one priority is doing right by users and take responsibility, do what I can. So right now we are spending the week doing everything we can to raise liquidity. Can't make any promises, but going to try and give anything I have to make that work. So essentially he's saying he's trying to raise money. There's a number of players who are in talks with, letter of intent, term sheets, etc. Every penny of that, if they end up raising anything, and of the existing collateral, will go straight to users unless or until we've done right by them. After that, to investors, old and new, and employees who have fought for what's right for their career. So what does this mean going forward? I'm not sure. That depends on what happens over the next week. But here are some things I know. One way or another, Alameda Research is winding down trading. They aren't doing any of the weird things that I see on Twitter. Obviously, there's a lot of rumors and allegations. And second, in any scenario in which FTX continues operating, its first priority will be radical transparency, which it should always have given. And basically, as a result of that, immediately Binance has already launched this. Other exchanges are starting to follow suit, where they are launching something called proof of assets, where you can transparently see the coins that are available on the addresses, which you can verify on the blockchain to know how much crypto is available. And in my opinion, that's a good thing, something that probably should have been there for a long time, because that way users can keep an eye on what these exchanges are doing, and if anything fishy is going on and exchanges are touching customer funds, or there's obviously not a match between the amount of funds that are supposed to be there for customer funds and what is being shown, then obviously people can sound the alarm bell, and this whole situation could be prevented. Because if FTX hadn't started touching customer deposits and customers just wanted to withdraw, those withdrawals could be processed and there would be no issues. But it's because of the leverage situation and because of the greed and because of doing things they shouldn't be doing that we've got this terrible situation right now. So hopefully the consequence of all of this is an improvement for the industry and overall for the average user of crypto, that when they use an exchange, that it is safe and that they know that the funds are going to be there, or that they're at least visible on chain anytime someone wants to look at it. So hopefully, even though this hurts in the short term, I think in the long term it is going to be a net positive for the industry if this is what comes out of it. Anyway, jumping back into the charts, I'll give you some thoughts on what I think could be lying ahead here with levels to watch right now. I know this video is already getting long. I'll link to all those articles down below so you can check that out. And of course, join my Telegram group. It's completely free. The link is in the description down below too, because I share updates there. So if you're not yet a member of a VIP, the Telegram group is completely free. You're welcome to join that. And of course, if you want to join VIP and get into the Discord, it's the second link in the description down below. You can join that too, because there we're talking about it 24/7 in real-time updates, because there's crazy stuff happening in these markets. Okay, so now we have to wait and see basically how this is going to end up playing out. Okay, like I've said before already, the 200-week moving average is what I want to see reclaimed before turning more bullish, which is currently at 24,000. Then we have, of course, the 3-day moving average, the 50 moving average here in blue, which we just got rejected from. That is going to obviously come a lot sooner, so that is about 21,000. If we can reclaim it without it being a fake out, that is already a very good sign to potentially a more bullish trend. So that is the first two things to watch. Very, very easy. You can set an alert on your chart and wait for that level. Until then, though, there is still this risk of downside, in my opinion. We don't know where the exact bottom is going to be. I don't know either. I mean, it could have been this sell-off that we had in the last 48 hours. The bottom could be in, but it could still go lower. Maybe we go to support. And if I were to look on the higher time frames, I do think there's a decent chance that we actually do end up tapping this, because, I mean, it's just a strong support and there is a lot of air between what we just broke down from and that 12K level. So again, we follow the scenario of if then, we keep watching certain levels. So like I said, if we break back above this 3-day 50 moving average, then we can start looking at a more bullish scenario. Until then, I think we're potentially looking at this level. And what we are looking for too is now this level is going to be important. So if I look at, for example, a 4-hourly chart over here, I think what is going to be important is the level that we broke down from. So for so long, this was support. This is obviously the 2017 all-time high level, around about, a little bit higher. But this was support for so long. We broke down now. So we had this rebound, which could still just be a short squeeze, basically liquidating people betting on further downside with high leverage. But now we have to wait and see this level over here. And it doesn't have to be this exact level. It's probably a bit broader, Don't really know where, but somewhere around here. Okay, we have to wait and see. As you can see, there's a lot of support in this and activity in this level. So now we are flipping back to this. If we get rejected here, that's something to watch for. If we get rejected, we could potentially go lower and go back down. And another thing to watch here is if we can flip it, reclaim it, then potentially we could go higher. And this is a very interesting scenario to watch too. I'm going to show you a chart, because if we get this reclaim over here, then this whole thing over here could end up being a Wyckoff accumulation spring. Now, this is obviously all just a speculation at this point, but we have to watch for that possibility where this whole multi-month sideways move could have been Wyckoff accumulation. We've got the spring, which can also be called a bear trap, sucking people in thinking it's going lower. If it reverses and reclaims and continues going up, then we have to watch that this could also potentially be a bottom. So that would be the scenario if this ends up being a spring and we reclaim this and we flip this level back to support. We have to watch for that possibility too. So again, we don't know for sure. There's no certainties, technical analysis about probabilities, and certain scenarios. If, then. Okay, so if we reclaim this, maybe it's the Wyckoff spring scenario. But if we reject it, maybe it's just a continuation and the move down to that 12 or 13,000 level, 14,000, 10,000, whatever it ends up being. So right now we have to see how this develops, depending also a little bit on what the extent of the damage is, what news comes out, what evidence and findings come out about FTX and SAM and what's going on there with those funds. And we take it one step at a time and see how that develops. But the good news is, overall, we are still perfectly in line with the 2018 bear market. And keep in mind that the bottom comes with maximum peak fear, just like the top comes with maximum FOMO. So at the time when everyone is thinking, I'm quitting crypto for good, I'm done with crypto, I'm super angry, I'm selling everything, I'm never touching it again, the stuff is going to zero, crypto is dead, it will never recover. That is exactly the kind of sentiment you see at the real bottom. And we haven't had that kind of sentiment yet in previous drops, but we are seeing it now. If I go on Twitter, I'm seeing people completely angry, quitting crypto for good, being done with the industry, saying all those things that I just said that come with peak fear. Now, I don't know if it's going to go lower or not, but I feel like we are getting pretty close. Maybe we still go down to that $10,000 to $14,000 level. But again, this is still perfectly in line with 2018. Exactly in the same time, 4 years ago, we had a 50% drop, the final drop that absolutely destroyed sentiment in the same way that it is happening right now. So, let's look at the charts. Let's try and stay rational. Let's look at levels. Let's see what happens. And again, remember, the peak fear that comes in those peak capitulation moments ends up being the best buying opportunity. If you had bought in that capitulation $3,000 Bitcoin in November 2018, that would have been the ultimate low for the last year since that happened. March 2020, we dropped back down to $4,000. Everyone thought crypto was done for when it dropped like that. Again, that ended up being the ultimate buying opportunity. So, is that here right now? I'm not sure. Maybe we go a bit lower first too. Keep an eye on this scenario. Keep an eye out for the potential of the Wyckoff spring if we reclaim this. But if we reject this, keep an eye on the possibility of going somewhere between $10,000 and $14,000 too. And then let's just see. Let's take it a day at a time. Let's take it a week at a time. Subscribe to my channel because I will keep you updated as much as possible. Obviously, join the Telegram. It's free. Follow me on Twitter because I also put a lot of daily updates there too. The links are all in the description down below. And if you really want to stay in touch and you want my daily insights and updates, like real time on this, 24/7 as much as possible, obviously I need to sleep too, join my VIP. You get access to our Discord. It's the second link in the description down below. And that gives you really the best updates that I can give there. So the key is, guys, also, before I wrap this up, always manage your risk. That is the most important. Do not overextend. You should never be in a situation where this market dropping puts you in a real financial difficulty. Okay? You should be in a situation where even if you lose all your crypto right now through a hack or through crypto going to zero or an exchange defaulting or whatever the case is, even if that happens, you lose every bit of crypto, you should be in a situation where, sure, that might hurt, and it might take a little bit of time to recover, maybe a year or two, okay? But you shouldn't be in a situation where that ruins your retirement or your financial situation, or that you can't pay the rent or anything like that. So be really, really careful with your risk management. Crypto is risky, it is volatile, but at the same time, that is why we have that huge potential upside of 10, 20, 30x. That does not come without big risk. So please be careful, manage your risk, and then I'm here to help navigate you through this as best as I can and keep you updated. So subscribe, and I will see you in the next video.